Welcome back to Investing Talk Podcast. Today, we're going to be focusing on the Hain Celestial Group.
Okay.
This is a company that you've probably seen at the grocery store,
Yeah.
especially if you're someone who shops in the natural food section.
Yeah.
You sent us some information on Hain Celestial Group covering their recent stock performance, their financial health, and some technical analysis.
Mm-hmm.
So today, we want to really break down what all of this means
Right.
for a clearer picture of the company's current situation and their potential future.
Mm-hmm.
We have a variety of different sources here, from recent stock data to financial reports and some technical indicators.
Okay.
So we're going to synthesize all of this,
Yeah.
pull out some key takeaways.
Sounds good.
I thought it was really interesting, just looking at Hain Celestial Group's stock performance,
Yeah.
especially recently compared to, their longer-term performance.
Right.
It makes you kind of wonder what's driving that recent uptick and whether it's going to last.
Yeah.
But first, let's just start with a basic overview of Hain Celestial Group.
Sure.
For anyone who might not be familiar with the company,
Yeah.
they are a U.S.-based international food and personal care company that specializes in natural and organic products.
Okay.
You've probably heard of some of their brands like Celestial Seasonings, Teas, Terra Chips, Earth's Best Baby Food. They are publicly traded on the Nasdaq under the symbol Hain Ray.
I think when we're looking at this, one of the first things that stood out to me was the fact that the natural and organic food sector has seen, such significant growth recently.
Right.
And Hain Celestial's specialization, aligns really well with this consumer demand, this growing demand that we've been seeing.
Yeah, absolutely.
And so that makes their current situation all the more interesting to examine.
Exactly.
I mean, what's going on with this company?
Yeah, so let's get right to it.
Sure.
Let's dive into the stock performance.
Okay.
Currently, Hain Celestial Group stock price is $3.91.
Right.
What we've really noticed is this recent positive movement.
Yeah.
A 4.55% increase.
Okay.
From yesterday's close.
Uh-huh.
And the volume today is significant, over 20 million shares traded.
Wow.
So that's a big number.
Yeah, that's a huge volume.
Yeah.
A jump like that alongside, such a big price increase.
Right.
It usually means there's a lot of interest in the stock.
Yeah.
And it makes you think, was there some recent news or some kind of shift in how people are feeling about the market or something?
Yeah. Right.
But I think it's really important that we look at this within, the bigger context.
Of course, yeah.
The larger time frame.
Absolutely. Context is key.
Yeah.
So let's zoom out a little bit.
Okay.
When we look at their 52-week high, it was $9.43.
Okay.
And the 52-week low was $3.28.
Got it.
But here's where things get kind of interesting.
Yeah.
If we look at the longer-term trends, things start to look a little different.
Okay.
So over the past year, the stock's actually decreased by 53%.
Wow.
And looking back even further 3 years, it's down by 88%.
Oh, wow.
And over the past 5 years, it's declined by almost 84%.
That's a big difference.
Yeah.
From today.
Right.
So that longer-term downward trend,
Yeah.
it really makes you think about some of the challenges that the company's been dealing with. And I know you wanted to explore this in detail today.
Yeah. It's a huge difference between the short term and the long term. It makes you wonder, is this recent uptick?
Is this the start of something?
Yeah. Is it a trend reversal or is it just kind of a temporary thing?
Right, like a dead cat bounce or something.
Yeah, exactly.
Or maybe there's, some positive news we haven't heard yet.
Right, exactly.
We don't
know yet.
Yeah, it's interesting. But let's move on to their recent financial highlights.
For the fiscal second quarter of 2025?
Yeah.
There are some positive things here.
Okay.
They reported a strong operating cash flow.
That's good.
Which is always a good sign.
Yeah.
And a reduction in their debt.
So they're managing their finances well.
Right. And those are both generally seen as positive developments.
Absolutely, yeah.
They also mention that they're exploring strategic options for their personal care category.
Interesting.
Which could be a catalyst for future changes.
Yeah.
Yeah.
How do you see that playing out?
Well, it's hard to say for sure, but, having a strong operating cash flow gives a company more flexibility to either invest in growth or further reduce that debt.
Yeah.
And, exploring strategic options.
Yeah.
For a segment like personal care could potentially unlock value for them if they choose to maybe sell it off
Right.
or restructure it in
Yeah.
a way that's more profitable. So it'll be interesting to see how the market interprets these potential moves.
Yeah, we'll have to see how that goes.
Yeah, for sure.
I think it'll be very telling.
We also saw some interesting recent developments and partnerships.
Yeah, fill me in.
So they've come out with some new flavors for their garden veggie snacks.
Okay.
Which shows that, they're continuing to innovate on their product lines.
Right.
But something I thought was even more noteworthy is this expanded partnership they have with Walmart.
Oh, tell me about that.
It's part of the Fight Hunger. Spark Change Not campaign.
Okay.
And this partnership seems like a really great opportunity for them to increase brand visibility and potentially drive sales.
Yeah.
Because Walmart has such a massive reach.
Right. They're everywhere.
Yeah, it's huge.
So that kind of exposure could be really beneficial for Hain Celestial.
Right.
We've seen other companies benefit from similar partnerships.
Totally, yeah.
Especially with these big retailers. Exactly.
You get your product in front of so many people.
Yeah. And I think, just thinking about everything that we've seen so far with Hain Celestial Group, what are some of the potential, patterns or angles that we can see emerging for investors to consider?
That's a great question.
One of the most obvious ones is that they operate in the natural and organic product space.
Yeah.
And that seems like a fundamental advantage to them.
Oh, totally.
Because that demand, for those types of products,
it's
not going away.
Yeah, I think it's only going to keep growing.
Yeah. And so they're kind of well positioned to capitalize on that.
Yeah, they've already got, a
whole
bunch of brands in that space.
Yeah, exactly. So they're already there.
They're established.
Yeah, they're established.
Yeah.
And then we talked about the possibility of, strategic restructuring within their personal care segment.
Right.
And it seems like if they were to divest some of those assets.
Yeah. It could be perceived favorably.
It could be.
By investors.
Yeah.
Because it would allow them to maybe focus more intently on their core food business.
Right. Focus on what they're good at.
Yeah.
And what's profitable.
Exactly. And it would also, potentially free up some capital to either reinvest in the business.
Right.
Or, pay down debt.
Reduce that debt burden.
Right. And then we see their efforts, in product innovation, like coming out with new flavors for their veggie snacks.
Right.
And also these strategic partnerships.
Right.
That could be key drivers in boosting their sales.
Right.
And improving their overall market position.
Absolutely.
It's important to keep your products fresh and exciting.
Yeah. People want something new.
Yeah.
Especially in that kind of market.
Right.
Where, there's new stuff coming out all the time.
Yeah.
So it's a really good sign that they're, continuing to innovate.
Exactly. And then these strategic partnerships can really expand a company's reach and influence, especially in a competitive landscape.
Totally.
Like the natural and organic food market.
So I think all of that is looking really positive for them.
But of course, we always have to consider the risks as well.
Of course.
And one that really stands out to me is this previous investigation by the SEC.
Oh, right.
The Securities and Exchange Commission.
Yeah.
While that investigation has concluded, any future regulatory issues could still be a concern for investors.
I see what you mean, yeah.
Yeah, I think it's understandable that investors would be cautious about a company that has faced, regulatory scrutiny in the past.
Right. They want to be sure that the company has really addressed those issues.
Right.
And that they have good compliance measures in place going forward.
Yeah. You want to make sure they've learned their lesson.
Yeah.
And that they're not going to run into the same problems again. Then there's the fact that the natural foods market is incredibly competitive.
It is.
There are so many players all vying for shelf space and consumer dollars.
Yeah, it's a crowded market.
Yeah, it's a tough market.
So many companies trying to get their products out there.
Right, and so Hain Celestial really needs to have a clear and effective strategy to differentiate themselves.
They need to stand out from the crowd.
And to maintain their market share, which is no easy feat.
It's not easy.
And then there are some aspects of their financial health that are concerning.
Like what?
So over the last 12 months, they've reported a net loss of $174.7 million.
Wow, that's not good.
Yeah. It's not great.
No.
They also have a negative price-to-earnings ratio of negative 2.0x.
That's not a good sign.
No, it usually means that the company isn't profitable right now. And then lastly, their debt-to-equity ratio is quite high.
Okay.
At 90.5%.
That seems pretty high.
It is pretty high. And that means they're using a lot of debt to finance their assets.
Okay.
And it could indicate a higher financial risk.
It definitely could.
So all of these numbers definitely warrant a closer look.
Yeah, I think they do.
You know, it makes you wonder, how are they going to, turn this around?
How are they going to improve their financial health?
Right.
It seems like a big challenge.
Yeah.
With those numbers.
Yeah, especially that debt-to-equity ratio. It's pretty alarming. But let's switch gears for a second.
Okay. Let's
talk about what the technical analysis is telling us.
Sure.
We already mentioned the recent price increase of 4.55% on really high trading volume.
Right.
When we look at the moving averages, the 50-day moving average is around $5.50.
So that's the short-term trend.
Yeah, and the 200-day moving average is around $6.50.
So the longer-term trend.
Exactly. And both of those are currently above the stock price.
Right.
Which indicates a downward trend overall.
It does.
Yeah, so it kind of confirms that this stock has been in, a bearish trend. But that volume today, with that price increase, could be a sign that things are starting to shift a little bit.
It could be.
Maybe.
Yeah.
At least in the short term.
Yeah, we'll see.
Right.
Maybe investors are feeling a little bit more optimistic.
Maybe.
About the company.
Yeah.
It's hard to say for sure.
Yeah. We'll have to see how it plays out. But interestingly, the relative strength index, the RSI, is likely in oversold territory.
Okay.
Probably somewhere between 30 and 40.
Interesting.
So that suggests that the recent selling pressure might have been excessive, and it could increase the likelihood of a short-term rebound.
So it could bounce back a little bit?
Yeah, it might. But of course, we have to remember that, caller.
What's that?
An oversold condition doesn't guarantee a sustained price reversal.
Right. It might just be a temporary thing.
Yeah. Could be.
It's not a sure thing.
Exactly.
Okay.
So based on this technical analysis, the recommendation is to hold for now.
Interesting.
So it's acknowledging those price swings and the overall downward trend.
Yeah.
But it's also, leaving open the possibility of a short-term bounce.
Right, because of that RSI.
Exactly. And I think what's important is to keep an eye on the moving averages and the RSI to see if there are any signs of a more sustained recovery.
A real turnaround.
Yeah, exactly.
It seems like there are a lot of mixed signals here.
Yeah.
The RSI is suggesting one thing.
Right.
But the moving averages are saying something else. And then you have the company's financial challenges, which are a whole other thing.
Exactly.
So it makes sense to be cautious.
It does.
Yeah.
And then we also need to consider the valuation perspective.
Okay.
Their price-to-sales ratio is quite low.
Right.
At 0.2x compared to the average for companies in the same sector.
Okay.
Which could suggest that the company is potentially undervalued.
I see.
But of course, there are those risks that we talked about. So it's kind of a tricky situation.
It is.
Because on the one hand, you have this low price-to-sales ratio.
Right.
But on the other hand, you have these financial challenges. And so it's important to, dig deeper and understand.
Why is it so low?
Yeah, why is it so low?
Is it genuine opportunity?
Right.
Or is there something else going on?
Exactly. And then finally, we can't ignore the volatility of this stock.
Right.
The weekly volatility is around 11%.
Wow.
Which is significantly higher than the average for the market overall.
So it's a risky investment.
It can be, yeah.
You could lose a lot of money.
Yeah. Anyone investing in Hain Celestial Group needs to be prepared for some big price swings.
Yeah, you really need a high-risk tolerance.
Yeah, for sure.
To handle those fluctuations.
Exactly.
It's not for the faint of heart.
No, it's not.
Okay.
So let's step back for a minute
and
look at everything we've talked about.
Yeah.
What does it all mean?
That's the question.
If you're someone who's trying to understand Hain Celestial Group, we've seen this recent positive movement in the stock, some good signs with the cash flow and debt reduction. But we also have this long-term decline in the stock price and those ongoing financial challenges.
Right.
The negative PE ratio, the high debt, and then, of course, the intense competition in their market.
So it's a mixed bag.
It is.
It really is.
Yeah.
It's not a straightforward situation.
No, it's not.
You have to weigh the pros and cons.
Right.
And make a decision.
Exactly. And the technical indicators, they suggest this possible short-term bounce.
Right.
But a sustained recovery isn't guaranteed.
We don't know for sure.
No.
It's hard to predict the future.
It is.
Especially with a company that has this much going on.
Right.
This many different factors at play.
Right.
So it's really important to take everything into account.
To look at the whole picture.
Yeah, the big picture.
And it's really interesting, they're exploring those strategic options for their personal care segment.
Right.
And they're continuing to focus on that natural and organic trend.
Yeah.
And those things could be pivotal.
They could be.
For their future.
Right.
Because they're aligned with consumer preferences.
Yeah. People want natural and organic products.
They do.
So that's a good thing.
Yeah, that's definitely a plus. Yeah.
But they're still facing some big hurdles.
Right.
Navigating that competitive landscape and improving their financial health.
Yeah, those are big challenges.
They are.
But it'll be interesting to see.
It will be.
How they address them.
Yeah, I'm curious to see.
Yeah, and what decisions they make.
Yeah.
Regarding their personal care segment and how they're going to capitalize on that growing demand for natural and organic products.
Yeah.
I think, this whole conversation has really provided a multifaceted perspective on Hain Celestial Group.
I agree.
We've seen the potential opportunities, but we've also seen the risks.
The risks are definitely there.
And it shows you how important it is to look beyond just, a single day's stock performance and to really consider the broader picture.
The company's financials.
Yeah.
The market trends.
The market dynamic.
Yeah, the whole thing.
The whole thing.
You can't just look at one piece of the puzzle.
Right, exactly.
You have to look at the whole thing.
So I'm curious.
Yeah.
What stands out to you the most?
I think for me, what really stands out is that contrast between the recent positive movement and the longer-term challenges that they're facing. It makes you think, what's going to have to happen for them to really turn things around?
Right. Is it even possible? I mean, are they going to be able to overcome these hurdles?
And are these initiatives that they're working on, are they really going to be effective?
Yeah. Those are all really good questions.
Yeah. I don't have the answers.
And unfortunately...
Well, I think they're important questions to ask.
Right. And it's something for our listeners to think about.
To consider.
Yeah, to consider.
They're, making their investment decisions.
Right.
So... yeah, it's a lot to think about.
It's a complex situation.
It is.
So if you found this analysis helpful,
yeah,
please subscribe, like, and comment to let us know.
Let us know what you think.
Yeah, and let us know what other companies or topics you'd like us to unpack in the future.
We're always looking for new ideas.
We are?
So let us know.
Yeah, thanks for listening.
Thanks for joining us.